Welcome to the Wheelbarrow Profits Podcast, where you get multifamily investing made real. Learn from top players in the real estate investment world as they share their secrets with you and discover proven strategies on apartment investing that actually work. To learn more about Wheelbarrow Profits, visit jakeandgino.com, your one-stop shop for everything multifamily. Now to your hosts, Jake and Gino.
Hello, everybody. This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, I'm doing good. I'm excited today. We have a great guest. How are you doing?
I'm always making it happen. You know, we got big things coming up. The live event is starting to shape up. Got some really big hitters, including this wonderful lady that's on the line today. And you just hired somebody, right?
We just hired a community director. I mean, it's awesome. I mean, I'm here to grow the platform. I'm here to answer questions. And, you know, as you start scaling a business, you just can't get to everybody. That's the problem. So I need help. And I think it's the first step. It's exciting. It's one of those things that you get out of your comfort zone because you're used to working by yourself. But it's really cool. I'm going to enjoy this. I'm enjoying it right now. So see what happens.
So more to come from the Josh Daddy. And today's guest is Kim Lisa Terr. Kim is a founding attorney in the corporate securities law firm of Syndication Attorneys PLLC. Additionally, she is a nationwide speaker at investing and crowdfunding events, as well as a syndicator and entrepreneur.
Hey, thanks for having me. A long time ago, my husband and I, back in 2007, were deciding that we wanted to invest in multifamily. He had already been investing in single-family real estate. So we went to some different events, started learning how to do it. And then we learned about syndication and using other people's money. And I became an attorney and started practicing in that area.
Oh, so the attorney came after the investor. You don't hear that too often.
Yeah, I was actually an attorney, but I was pretty new. I was kind of trying to figure out what area of practice I wanted to go in. Actually started out in environmental law and just, kind of morphed into real estate from there.
So this is a disclaimer. Jake and I normally do not like to speak to attorneys. But when we got on the phone,
come on, man. I'm getting better.
But you see, I'm right though. But when I got on the phone with Kim a couple months ago and we did our strategy call, and it was like, wow, what a ton of value for an hour call. And we hadn't syndicated yet. And it was amazing the value we got for that call. And we're like, that's it. This is our syndication attorney. I was dying to get her on the call today to go over this whole process, to introduce you to the Jake and Gino community. I was actually fortunate enough to have her come speak at our event in October. So that's a full disclaimer. I think you guys are going to enjoy speaking to her. Like I said, I was like, wow, this is great. Usually you get on the phone with an attorney, it's like, oh, pain. It's like you feel it, but I really enjoyed the call.
Man,
anyway,
Gino's just digging a hole for himself right now.
Well, I have to admit that I don't like talking to attorneys.
Full disclosure, see? That's what the life coach just pulls it out of people, right? Anyway, let's dive into this. I mean, let's go into the broad aspect of it. Can you just define for us, what a security is, and maybe go into the security laws and where people get tripped up in this whole entire process?
Well, so a security is defined in the 1933 Securities Act, first of all, and then it was mimicked by all 50 states, which have their own little kind of mini Securities and Exchange Commission. They each have their own securities regulatory agencies. So they define securities, and there's a whole big long list of what is a security, but the two that pertain to real estate investing is the promissory note and something called an investment contract. And so the investment contract was further defined way back in 1946 by a U.S. Supreme Court case as an investment of money in a common enterprise with an expectation of profits based solely on the efforts of the promoter.
Wow. That's a lot. So, I mean, what does a real estate offering become a securities offering? When does it become a securities offering? Is that when it becomes?
Well, so just to follow up then, once we've got the definition, if you know you're selling securities, so let's kind of back up one step. On that, investment contract is the one that most people are doing. So that's when you're selling interests in a company and there's a general partner or somebody else who's going to be running the show. They're the promoter. They're the one whose efforts are going to generate the profit. Everybody else is a passive investor. That's when you get into the realm of securities laws. Or if you're selling promissory notes in exchange for money, and if you're doing that on a regular basis, you're bringing in money time after time to on your single family deals, or, or whatever you're doing with it, that's where you run into starting to be selling securities. So then if you take that one step further, it's like, well, so what? So I'm selling securities. What does that mean? Well, the 1933 Securities Act says if you're selling securities, you either have to register them, which means you go through a pre-approval process with a regulatory agency, or you have to qualify for an exemption from registration.
Okay.
So that's when we fall into, okay, so we know we're selling securities. Now what do we have to do? Well, you're not going to register them because that's a really long and expensive process. That's the process of going through an initial public offering like Google and Facebook did, selling your interests on the NASDAQ or New York Stock Exchange or through broker dealers. That's not something you're going to be able to do when you have a real estate deal under contract and you're trying to close in 90 days. So you've got to look for an exemption that will allow you to sell these securities legally. And so there's a whole set of different exemptions. Each one of them has a different set of rules, and you work with a securities attorney to figure out what you want to do and which set of those rules is going to fit best with your model. And then you have to follow those rules in order to sell the securities legally.
Kim, I should have asked you this question before, and I get this question asked a lot. When should somebody contact you about securities, about setting up and having questions about syndication? When should they start that process?
Well, they should start their education process as early as possible. So listening to podcasts like this, going to our website, digging around under our resources page, listening, looking at the articles, the FAQs. That's where they're going to start getting their education, getting familiar with the terminology. But when they actually need to hire a securities attorney is when they have a deal, like say if we're talking about multifamily, when you have a specific deal under purchase and sale agreement, and you've been to the property, and you've also reviewed the financial statements. So you want to get those income and expense statements for the last 2 or 3 years of property operations as quickly in the process as possible, even before you put the property under contract if you can. And you want to do all those 3 things. So that's, purchase and sale agreement, physically been to the property, and reviewed the income and expense statements. Once you've done that, you're 90% likely to go forward with that deal, and you need to get a securities attorney working on your documents immediately thereafter while you finish the rest of your due diligence. If you wait until you've done all your due diligence and all the way from when we start giving you drafts and you're commenting on them to the time that they're ready to go and you're ready to use them, and then you need to have another 4 to 6 or 8 weeks to raise that money. And if you don't give yourself that time, you're going to fall short. You're not going to be able to close that deal.
That's awesome. I like that. Can we get into a couple of definitions? The first ones, I guess, is, how do you define a passive investor and an active investor?
Well, an active investor is somebody who is responsible for generating their own profit. Okay, so they're actively involved in the deal such that they, maybe they invested some money, but they're not depending on anybody else to make profit for them. If you get somebody who's put their money into a deal and they're looking to the manager or the general partner, or, whoever promoted the deal to make the profit and send them a check, that's when you've got a passive investor.
Okay. And let's go into what an accredited investor is and what a sophisticated investor is.
So an accredited investor is someone who made kind of the 1, 2, 3 rule: $1 million net worth, $200,000 income single, $300,000 are married. 5 other definitions of an accredited investor. One of them is anybody who is a member of the management team. Okay, so the people who are the officers, directors, and promoters of the deal, even though they may not have those financial qualifications, they can still qualify. The other definitions pertain to corporate structures, trusts with the company where all the investors are accredited, that kind of thing. So they're a little more technical, not used as much in my world, with my clients. The sophisticated investor is actually somebody who is unaccredited, but has more than just a job, some kind of a degree, economics, finance, MBA, business, something that gives them some kind of background and experience, or maybe they've owned a bunch of real estate before, or they've owned other businesses before, or they're just really heavily invested in the stock market. So somebody with those kinds of qualifications where they're used to looking at deals and making evaluations of whether or not this is something that's a good fit for them, those are the kind of people that the SEC considers to be sophisticated enough to be considered an unaccredited but sophisticated person.
Okay. Before we jump into the Reg D and all that, can you talk about the substantive relationship? Because that's where I get tripped up a lot. And that's where I think a lot of people, it's that hazy, like, part of the whole raising process. Can you just go over that for us real quick?
Well, so it really depends more on the quality of the relationship than how long you've known somebody or, you know, how you met them. So the main thing is you need to have sale of a security to them. You need to have some time to ripen that relationship. And something has to happen would be between the time that you met them and when you make that offer to further that relationship. So I liken it to a dating
This
relationship.
sounds crazy to me. This
somebody.
sounds so subjective and crazy. Like, I feel
Well, it's subjective, but think about it. You know, what if you met somebody at a bar and then you turn around and said, you know, gosh, you're beautiful. Let's get married, right? What would they think? They would think you were a freak,
it happens,
right? So don't be a freak.
Yeah, how long does
right,
that
with your
relationship last, bro?
you never
Exactly,
know. You never know. It's love at first sight. This is investor at first sight. I knew they had.
Okay, but how many times is that likely to fail versus succeed? You know, it's much more likely that relationship is going to fail than succeed versus one where you've met somebody, you've taken time to get to know them, you make sure that you have some common interests, but more importantly, you need to know what their financial qualifications are before you make that offer. So you already need to know if they're accredited or sophisticated. So you will have had to have had a conversation with them about that. Just sending somebody a form and having them check a box saying that is not sufficient. You have to have more than that. You have to have some follow-up where you have a conversation. You talk to them about their investing goals and you know what they're looking for. Make sure they're a good fit for your organization.
So you meet them, you send them through CrowdStreet, and then you have the call.
Yeah, but that only works.
We can go to second base, right, Kim? Then we can go to second base. Maybe
that if you're working with a crowdfunding company, that's a completely different thing, and it's only going to work for people who have significant experience and track record with the kind of investment opportunity they're offering right now.
Okay. Let's go into the 506B and 506C offerings. Can you just dive into that whole, I guess, dialogue of what they are and how you can only you go with non-accredited investors or accredited investors? Can you go into that for us?
So the 1980s. And really, this is the friends and family exemption. All right. The idea here is that this is a private offering. It's not public. It's offered only to people whom you have these established pre-existing relationships with. You're not advertising it. So what it allows is you can raise an unlimited amount of money from an unlimited number of accredited investors and up to 35 unaccredited but sophisticated investors. The investors can self-certify that they meet those qualifications, but you cannot find them through any means of general advertising or solicitation. So this is word of mouth one-on-one. All right, think of it that way. Word of mouth one-on-one, people you've already met, people you've already developed relationships with, people in your database of potential investors at the time you get something under contract. That's what that's for. All right, so once you've done a few deals and you've got a track record and maybe you've kind of exhausted that group of people, now's the time to think about crowdfunding. Then you're going to look at Regulation D Rule 506C. So 506C allows you to raise an unlimited amount of money from an unlimited number of accredited investors, but they have to be verified as accredited. So instead of them just checking a box on a form saying, yeah, I meet this definition, they have to actually go through a vetting process, either by you, or you can send them to a third party that does it, or they can get a letter from their own CPA, investment advisor, or attorney. So with that one, with the 506C, you can advertise freely. You can, drop flyers from a plane if you want to. You can, get on the intercom on a flight and announce it.
Well, you guys are on the beach in Florida, right? So we can fly one of those planes over. They carry the flags,
Invest
the
with
big
us.
words, right?
Jake wants to hit a home run. He wants to hit a home run right away.
Call this number.
Swing it for the fences, baby. Here we go.
So, I mean, is that something that is really popular now? Which one do you think is more popular in the realm right now? Which one would you advise people to use?
By far, the more of my clients are doing 506B offerings than they are 506C. Okay. And it's just because, if you've never done this before, strangers aren't going to invest with you because the first question they're going to ask is, what have you done before? And if you can't tell them you've done anything, they'll say, yeah, no thanks, or let me know when you've done something. But your family and friends and people that already love you, know, like you, trust you, they're going to be willing to take a chance. And they're also looking for investment opportunities and they don't know how to find them. So they're going to be happy to meet you. So you just have to get out and network. That's the whole point. So you got to get out and network and create a database of prospective investors so that when you get that deal under contract and you get those 3 things done, you're ready to hire your securities attorney. You're not afraid because you know you've already been talking to people. They're ready to go as soon as the documents are done.
So in your, I guess, experience, how long should people start that database of investors? When should they start that? I know I always tell people 6 months ago, but how long do you think the average person needs to take to start building up that database before he even starts?
I think people take years to build up their database, but I think you don't have to take years to build up your database. You can do it much quicker if you start networking. And the best way to network is to come to events like having in October, where there's going to be a ton of people there that are interested in doing the same thing you're interested in. A lot of those people are becoming sophisticated investors just by virtue of the fact that they're there and they're learning about how to do it.
I love that. I think getting face-to-face with people is becoming a lost art, and people I don't want to do the travel, but I think you have to get in front of people and make that relationship and really make it count. I think that's excellent advice. I really do.
The most effective way to network is face-to-face. And if you can't do face-to-face, then something like this, where you can do Zooms, where they can see your face, they can hear you, they feel like they get to know you.
So I've had this question also. I've had a lot of guys trying to raise capital and they create a webinar, I guess something about the product itself and the property itself. Who can they send that out to? Is it the same kind of rules where they just can't blanket that out to everybody? They need to have the substantive relationship with the person they're sending it out to?
Well, it depends what the webinar is and what its intent is. So if you're doing 506B offerings and you want to be able to bring in unaccredited investors, then your webinar has to be generic and educational, and it cannot be a document. I mean, it can't be an infomercial, right?
Okay.
It can't be just about, invest with me, here's the deal. It has to be, hi, here's how you invest in, these type of markets. Here's how we vet deals. Here's what we look for. And here's how you could do this yourself if you wanted to, if you were so inclined. The reality is 97% of the people aren't going to be so inclined, but they're interested in learning the information. Okay. So that's what you would do if you're going to be doing 506B offerings, generic and educational. If you're doing 506C offerings, now realize that you're excluding all of your unaccredited investors. So all of a sudden, your family and friends who aren't accredited cannot be in this deal. So if you're going to do that, now you can go ahead and you can talk freely about your deal and the parameters. You can do a whiteboard and show how it's going to work. Or show some examples of the financials.
So let me dive back into that generic one, because I'm trying to picture it for ourselves. If you want to do a generic website, can you capture it without even talking about the deal or anything? Say, hey, we're syndicating deals. This is what we do. If you want more information, can you reach out to us? Is that something that you can do on that webinar?
Yeah, you can absolutely do that. Think of it like the difference between a documentary and an infomercial. In a documentary, the person doing the documentary is going to introduce themselves, talk about their qualifications, so that you will understand that they are an expert in that field and you should pay attention to what they're saying. They have something valuable to give you. So that's why you would introduce yourself only in that context. Then you go directly into the educational piece. In the 506C context, if you're advertising an actual deal, you go right into talking about the deal and what it offers, and why it's a great opportunity.
I think that's
for your website, for your generic website, it's a company brochure. Okay. We're not selling stuff. We're just telling you who we are, what we do, showing you our bios and explaining our processes. I
think that's a great place for guys to start, for people to start in the very beginning for that generic. Give something and you're going to get something in return, and then just keep building that relationship and keep offering advice. I like that. That's where they should start. In the documents, can you go over the documents that you need to prepare in it, the PPM, the operating agreement, subscription agreement? Can you go over those real quick for us?
So the purpose of the PPM that's the document that tells kind of the whole picture of the investment opportunity. It lays out all of the, who the players are, what kind of corporate structure it's going to have, what kind of risks are involved, and how things could go wrong. Whether it's related to the property, the economy, the management team, or whatever. You're going to talk about all of those risks, and then that's the disclosure document that you hear about, right? That you're required, and if you're bringing in unaccredited investors into your deal, you are required to have that. You have to have it. And the operating agreement, that's the governing document for your company if you're doing an LLC. If you were doing a limited partnership, it would be a limited partnership agreement. If you were selling something besides real estate, you might use a corporation and you would have bylaws. And that, so each one of those describes how the company is going to be run. And so that's the document that you have to live with for as long as you own the property. The subscription agreement is where the investor tells you about themselves. So they're describing to you what their financial qualifications are, certifying to you that they meet the financial qualifications to understand the risks, and they're basically assuming the risk by saying, I get it, and I could lose anyway, and here's how much.
On that, can you go over that 2012 Jobs Act and how it really began to affect the solicitation of the funds?
It's really just the before that, there was only the Regulation D Rule 506, which is now 506B. And I just want to point out that that's a B like boy, not D. Okay, it's 506B. So when the Jobs Act came along, the SEC said, well, we'll relax the standards and we'll create a new Reg D Rule 506, and we're going to call it 506C. We're going to rename the old one 506B, and it's still going to stay intact. None of the rules on the old one changed. It's still there. You still got to have the pre-existing relationships. Still can't advertise. Okay. But we're going to allow advertising if you verify that all of these investors are indeed accredited before you accept their funds. So you can advertise to anybody, but before you accept anybody's money, they have to go through the verification process. The issuer of the security, so that's the person promoting the deal, is required to take reasonable steps to assure that all investors in their 506C offerings are accredited. Jobs Act also created Regulation A+, which there was an original rule, Regulation A, which was really kind of a streamlined public offering or kind of a mini public offering. So it wasn't quite as onerous as going through the public registration process, but you still had to go through some registration or reporting similar to a public company. Prior to the Jobs Act, the limit on that was $5 million was all you could raise with it. So hardly anybody used it because it was, 2 or 3 times more expensive than doing a 506 offering. And you could only raise $5 million. The Jobs Act, they created a Regulation A+, and they raised that dollar limit to $50 million. So you can raise up to $50 million in a 12-month period, and you can advertise and you can raise money from anybody. So when would someone do Reg A+? After they've done some 506 offerings, after they've done some 506C offerings, and now they're running out of accredited investors and they want to be able to go out and advertise to the general public without worrying about what the financial qualifications of their investors are.
Okay. Nowadays, you hear the buzzword crowdfunding. I just want to get your opinion of what the benefits are, what the pitfalls you see of crowdfunding, and how you see it shaping or changing the way people raise money for real estate deals.
So crowdfunding is really just a way to advertise a securities offering. So the first thing you got to do is step back and say, which securities offering am I going to do that allows advertising? You're really restricted to only a couple of choices, and that's 506C or Reg A+. And so, you have to, as I think I've mentioned before, you're going to have some experience and a track record showing that you know how to do what you're doing now. So if you're buying multifamily, you should have 3, 4, 5 deals under your belt, and some of them should have come to all the way to conclusion and been resold. So you can show, hey, we've already done this successfully multiple times. Now we're ready to go out to the general public. And that's when you would want to think about crowdfunding. So when you're crowdfunding, you've got options. You can, talking before, it doesn't have to look like a company brochure. It's a deal website, right? It's just talking about that deal, offering documents on that deal, on that website. You're letting people, maybe even make direct investment off that website. So that's going to change the way that you advertise your own deals. Or you can hire a crowdfunding platform or team up with some different crowdfunding companies that will promote the offering on your behalf. And there's different types of crowdfunding platforms out there. There's the type that just acts like a marketing service. You pay them a fee, they post your deal, they help you put up some nicer looking marketing materials, they'll push it out to their database, and then the people will come to you to invest. So that's like CrowdStreet. You guys mentioned CrowdStreet earlier. There's a different model where if the crowdfunding company likes your deal, they'll kind of repackage it and sub-syndicate it. They'll go out to their own group of investors, raise some money, and then they'll come into your deal as a single investor, maybe as a lender, maybe as an equity partner. There's all different deals that they'll strike with you to do that. But again, those crowdfunding companies are not even going to talk to you until you have a track record. So if you don't have the track record yourself, you have to find somebody that does, that you can team with.
What are some of the problems or pitfalls that you see syndicators run into?
They wait too long to hire their securities attorney. So, they're always in a rush and then they can't get deal closed or, they can't get it closed in time and they have to start getting a bunch of extensions because they didn't plan ahead. They didn't understand, when to get their securities attorney working on their stuff. Other things that, we have clients, unfortunately, that won't read their documents and they run into big trouble because if they don't read their documents, they can't possibly follow them. But if you're not reading if they're not reading their documents, their investors are. And if those investors are finding things in those documents and saying, well, what about this says that, and you're not doing that, that's when they start getting in real trouble.
I like that. Jake, do you have any questions before we get to the short answer?
No, I think that she's hit a lot of good points. I was just going to jump right in because she's been investor, entrepreneur, attorney. I just want to find out what are some habits, or what is your best habit for success that you do on a daily or weekly basis that's really
something that really changed my life just in the last few months is Miracle Morning. Are you familiar with that?
Yes,
we are. Yeah.
So Miracle Morning has been fantastic for me. It got me out of big doldrums. And, within just a few weeks, I saw extremely positive results. So highly recommend that book and, and doing the practices in the book. That's
I think everyone's got their own little Miracle Morning. You want to share yours a little bit? Or is that too
I read for 10 minutes. I try to pick a book that's related to my practice or something that I want to be able to teach my clients. I have a vision board that I've created that, says, why am I doing all of this? Why am I working so hard? I have, I do my meditation, I do exercise, visualization, and affirmations.
Very cool. So you mentioned the Miracle Morning. Is there another book that you found very helpful that you want to recommend to the listeners?
I've been reading a book just lately called Slicing Pie.
Gino, up your alley, bro. We got Slicing Pie in the house.
Have you guys read that book?
I've never heard of it. No.
Yeah. Okay. Well, it's some. I learn stuff every day from people that call me or my clients. But somebody told me about this book, and I thought I'd check it out. It's really more for entrepreneurs, but where it works in the syndication context, especially real estate syndication, is that you're going to create a structure, a corporate structure that has an investor company, so a company that sells interest to investors, but it's going to have a management team. So if you're using an LLC, you're going to have a manager managed LLC, and then the manager itself is going to be its own LLC, and it's usually going to be a team of people. And that team of people has to figure out how to slice the pie. How much does each person within that management team earn of all the money that comes to them from the investor entity? And I think the Slicing Pie book is a good way to kind of look at that and integrate that into
So what's some of their takeaways in it that have kind of grabbed your interest? Is to talk about making sure that everyone has a role and clearly defined roles, or what's some of the highlights?
Letting people keep track of their time. So you actually have people keeping track of how much time they've spent on the business, so that when you're trying to figure out later who gets what, you're allocating it proportionately to the amount of time that they've spent, but you're also trying to figure out how much is the job that they're doing worth. So you look at it according to industry standards. What would somebody doing that job, it doesn't matter if they're a CEO of another company, if that's not what they're doing for you, it's what are they doing for this company, and what is that worth in the marketplace if they were to hire somebody to do it, and then allocating the cash to them that comes to the company according to their interests.
Cool. Yeah, we'll have to check that one out. What project are you excited about right now?
I have a subdivision project that I'm a partner in South Carolina. Been out on the market for a while. We're just hopefully this summer we're going to be selling the last few lots, which of course is where the profits are made.
So thumbs up or thumbs down on that one, because we have a friend that is kind of finishing up one of those. It sounds like you want to be out of it as well, but maybe
2 years ago when I was on the phone 2 or 3 times a day dealing with it, I wanted to be out of it. Now there's not so much for me to do, but I'm just looking forward to having it done so we can actually realize some of the rewards for all the
cashing in. Very good. Yeah. Gino, you were going to say something.
Yeah, I want to ask one question. It just popped into my mind. I mean, it's like the person who's the expert. What do you look for in a syndicator? Like to actually vet them out and to say, I like this deal, I like this syndication, I like this sponsor. What are your telltale points that this is a good deal?
I have an article on my website that's called 10 Things Investors Should Know Before Investing in a Real Estate Syndication.
Great.
And it really just explains to them the kinds of things that they should be looking for. Anybody's free to go there and download it, and you can share it with your investors. The resources page is the one you really want to focus on, because that's where all the articles and we do free monthly teleseminars with live Q&A. So we record all those. We post those there as well. We've got FAQs there. I would encourage you to read all, as much as you can. And the articles are short. They're 1 and 2 pages.
Short enough so even I could read them, Gino, is what she's saying.
But we understand that real estate investors have very short attention.
I know Jake was probably dying. Reg D, Reg C. I just try to keep it as brief as possible, low level here. But I was actually going to tell Jake to jump on one of those teleseminars, because that's I think I first met you and heard about you. And I said, this teleseminar was awesome. It was between 30 and 45 minutes. Then the Q&A afterwards is what's really, really amazing. So before you even listen to this podcast, after the podcast, go sign up for one of those teleseminars, because they're really informative. And if you can get the chance to speak one-on-one with Kim and ask questions, that's just worth so much. And then after that, I know you're going to sign up and speak to her for a strategy session for an hour call. Download all the resources, start investing now, start building your database now, start getting educated now. And when you're ready to take action, don't wait. Like she said, to do the deal. Don't wait to get the syndication attorney. Get that lined up. It's all about building your team members. You agree, Jake, or disagree with that?
No, I totally agree. So let's qualify this person. So they've gone on, they've watched some of the videos, they've educated themselves, and now they're looking to syndicate a deal, and they've started to tee up some deals, and they're working with brokers. Is that a good time, Kim, for them to engage with you?
Sure, they can engage with us. My law clerk and I both take calls. And we'll, talk to you and let you know what the next steps are. You'll be set and ready to go. You won't feel as nervous about it, wondering how am I going to find someone to help me with all this.
No, that's a really good point, though, because we always stress building the team in the beginning, because once you do a deal, it's all that uncertainty. Who am I going to call for this? Once you've kind of built that team out and you've vetted these people, next time you're just literally picking up the phone, hey, ready to go, be prepared, and then you're kind of following through with it. So we really strongly promote getting your team in place. G-Dad, what else you got?
What else I got? I just wanted to just thank Kim for being on. It's been great. We're going to see her in October. She's going to be presenting there. The chance to network with her at that event, I think, is priceless. But before you get to the event, make sure you make the connection. If anyone wants an introduction, I can make a personal introduction to her. I love building our team out and making our team available to everybody, because it's the people who we want to use. Jake is talking about our educational product. We've got an educational product on the platform. Go on the jakeandgino.com website, 20% off if you use the coupon code ELITE, ELITE. We're building the platform out. So that's all I got, Jake. This has been really informative, to be honest with you.
Kim, what about Ed Sheeran? You know about this Ed Sheeran cat? You know about him?
No,
the singer. He was on Game of Thrones at one point. Okay. Check him out, because if you want, I think we're going to the concert at the live event, so maybe we'll rope you in. Have a few brewskis before we sing the British New Kids on the Block guy here, whatever he is, right, Gino?
Dude, you're killing me. My kids all want to come.
We're gonna be part.
Wow.
That's great.
Hey man, we're gonna do it. We're gonna do it. And guys, I got one more for you here. If you guys found value in the show, feel free, send Gino an email, gino@jakeandgino.com. Send a screen grab of your iTunes review. And the G-Man is gonna send you a free book because he's a nice little sweetheart guy there, right, Gino?
That's right. We got to
give away the freebies, baby.
That's
so
right.
anyways, Kim, thank you so much for your time.
Thanks for the invite.
I know, really appreciate it. Okay, take care.
Thanks, Kim.
We trust that you enjoy the Wheelbarrow Profits podcast. Visit jakeandgino.com, your one-stop shop for everything multifamily. See you next time when Jake and Gino share more of their investing secrets with you.